Hi guys, welcome to the Savvy Money Show with me, host Sean. I apologise I haven't been showing out videos the usual rate. I did have to make an unexpected trip to take care of something. Hope to start resuming fairly soon. But I thought I owed you guys a video. So here it is. If you're in my Discord, which is totally free, you will have been updated about this. But basically, it's Chinese stocks. We're going to start with NEO. There was a big hype in NEO earlier in the year. If you remember, I got in at $3 last year, and people criticised me for that. It hit 57. I got out just before it hit 50. People criticised me for getting out then. And then it came all the way down again. Now, as price to sales and price to book around 2.26, its market cap is above enterprise value still, which shows it as being slightly overvalued, but it's an EV stock, so it will be. Its gross profit is 3.5 billion, which is good, and we show that it's growing basically quarter on quarter, and we can see that its cash position is 30.5 billion, which if we look at the balance sheet is enough to bring the liabilities down to 1 billion, or just under 1 billion. When you see the assets at 65.5 billion, it's a good position. I can see it announcing buying back the remaining shares from the Chinese government fairly soon, but I think it's waiting for the Chinese market to come back. Now, don't forget to hit that lovely like button, and don't forget the sexy subscribe button. A lot sexier than me, just ask the wife. And if you want to be a hero, hit the bell notification. You'll be notified when a new video gets uploaded. And why not check out the links in the description below. If you're looking for a free trading platform, you get a free share worth up to £200, depending on the platform you use if you deposit a small amount. We have Baidu, which has trailing PE of 8 and a forward PE of 2, price to sales of 0.45, price to book of 0.23. Now this is like the Chinese Google, and is making mega revenue. Assets outweigh liabilities by 2.5. It's just doing amazing like Google is, and free cash is 52.5 billion. Now, if you look at where it was all-time highs, it's 100% off its all-time highs. There is a point to all this. If you wade through to the end, you'll see that point. Now we have Tencent. Now, China cracked down on them, forcing them to give up some of the rights to some music when it acquired recently another company, because it had over 80% of the rights to music in China. Now is $8.58, and it was, if you see there, over $30, so it's almost 300% drop. Now, if we go to it, we see price to sales 0.46, price to book 0.28, trailing PE 23, forward PE 3.39. Now, but people don't want to touch it. There's Chinese shares. Ooh. Now, we can see how it makes its steady company. You know, its assets are worth more than 4 times its liabilities, and you can see it has cash of 7 billion on the books. Now, this is number 1 in China and best in class, and it is so undervalued, it's ridiculous. And yet, people don't want to touch it. We're going to go with another company, Baba, which is over 100% off its all-time highs and of 307. And we all know Baba. It's the one that Charlie Munger has gone into recently. Now, we know what's gone on here. Again, it's trailing PE of 19, forward PE of 2. Price to sales of 0.56, price to book of 0.44. This is a Chinese Amazon. The gross profit of 308 million, and you've got, well, I mean, it has almost 3 times the assets to the liabilities. It has 337.6 billion cash on hand. Don't forget, you also have the Ant Pay thing. It was going to IPO. Now, why would it IPO that? Because it wants to. There are a couple of reasons. It wants to clear up its debt, its liabilities, in case of interest rate changes, or also at the time it was a huge period for IPOs, tech IPOs, so it wanted to capitalise on that. Of course, it got beaten down by its battle with the Chinese government, and of course in China the government's always going to win. Now, I can't see any way that China isn't going to let it come back. You know, it's already been resolved, and I think these are the companies that you need to be looking at now. If you don't want to take the risk of those companies, you can always look at the MCHI China ETF. Now, it's 40% off its highs, and when you look at this, you have to think, why? Now, why would it be off its highs? Why would the Chinese government be trying to halt its own company's growth? Now, it doesn't make sense. Now, you can see there you've also got JD.com, which I'm a fan of, and Pinduoduo, which is PDD. I spoke about it last year. Now, in my opinion, there's only one reason why. China has shorted its own stocks. It saw the US stocks were going up, and it went into US stocks, and whether it was the SPY or whether it was particular stocks, and at the same time it shorted its own stocks, because you saw a massive amount of money coming out of China, massive amount of money going into the US, more than just the Fed could deal with. At the same time, you had the same thing happen with Japan. Japanese market, you saw it with the Japanese market. Japanese market rarely moves, but you saw a blip where Japanese market pulled money out of its own market and put it into American market, and then pulled it out of American market and put it back. The thing is, it's not going to do it forever, because it wants the country to grow. It's doing it for purely financial things. Baba is not going to go to zero, neither are any of these other companies, because it still has financial stake in each of them. So, what is it going to do? It's going to, at some point, pull the money from the US, and is going to put that money back into the Chinese stocks. It will stop shorting its own stocks, and it will pull the money out and rotate it back into its own stocks. And at that time, you'll start seeing it soar like a green boner candle you've never seen before. And then you will probably hear news about all these companies doing IPOs of their subsidiaries or doing acquisitions. But by then it will be too late. So I'm not telling you to buy these. I'm not telling you to buy calls on them. I'm just saying, if you see dips, maybe pick up some calls or shares in the company, leaving yourself room to buy more if it goes down more. Me, I've picked up some Baba. I'll be picking up some more this week. I picked up some Baidu and Tencent, and I'm buying calls in MCHI. And I would like to know what you guys are doing. I'll see you in the next video.